Hey everyone, I wanted to do a quick update on what is going on with crypto. I'm still traveling, still not at my normal home, so I don't have my studio, but I thought we'd just hop on, do a quick little update on two specific warnings, some things to keep an eye out on the crypto market over the next couple of weeks, and which could be potential red flags, cause the market to have a bit of a correction. Bottom line is I'm still very bullish on crypto. I've been accumulating more of my positions with Bitcoin, Cardano, Ethereum, all my positions that we always talk about. But there are a couple of warnings that we just need to keep an eye out on because crypto has been doing extremely well. And you know what? It's not going to be uncommon or surprising for us to see a bit of a pullback. So first of all, what's going on in crypto right now is we have everything going on with the infrastructure bill in the Senate. This is important because with this infrastructure bill, they sort of threw in a tax, something with a crypto tax last minute to generate about $28 billion to pay for this infrastructure bill. And they sort of just threw this in there last minute with regards to crypto tax rules, regulations, how crypto exchanges and brokerages are going to have to report information. And a lot of people aren't too happy about this. But that was just the beginning. They had this new part of the bill that would generate $28 billion, help to pay for this infrastructure package. But it got a little bit worse because then just the other day we had an amendment that was submitted by a couple of senators and attached to the bill, which essentially targeted proof of stake cryptocurrencies. It's going to be penalizing proof of stake cryptos, and the White House backed this. They said they liked the idea, they liked it, and this has caused a lot of concerns in the crypto market. Jack Dorsey, Elon Musk, Brian Armstrong, who's the CEO of Coinbase. We've seen a couple of other major people in the crypto space have come out and said that they don't like this at all, because essentially what the government in the US is doing is trying to pick winners and losers of the crypto market. They're trying to almost stifle innovation, stifle technology development for crypto, rather than just let everyone go ahead, all these companies go ahead, figure out what's the most energy efficient, what's going to be the best in terms of scalability, and just allow companies to develop the best technology. Instead, the government stepped in with this infrastructure bill, and if it passes exactly how it is, they're stifling innovation and essentially making it so all of these proof of stake cryptos are going to be penalized more than proof of work. A couple of reasons why they could be doing this. My dog's just like rolling on the ground. But a couple reasons why they could be doing this is because central bank in the US could be looking to roll out a central bank digital currency, and that central bank digital currency could be a proof of work using proof of work technology rather than proof of stake. That's one reason. The other reason could just be because senators don't totally understand the difference between proof of work and proof of stake. Either way though, this new amendment to the bill that they recently talked about would be hurting crypto in terms of technological innovation and the technology moving forward. So we need to keep an eye out on what is happening with this infrastructure bill. There are a lot of parts to it. Either way, we know it's going to be changing the requirements for exchanges, brokers, and even some mining companies on how they're going to report and track information. So we need to keep an eye out on that. In addition to it, the other thing going on right now is with regards to Ethereum. Ethereum has been having a massive rally recently. We've seen it go from about $1,800 per coin all the way up to now where it is, which is over $3,000, right around $3,000 per coin. But the important thing with Ethereum is that we have seen it increase every single day, closing the green 95% of the days over the last 3 weeks. If we look at the last 3 weeks since July 21st, we have seen Ethereum's price increase every single day but 2 days. So what we're seeing now in the charts is something called one technical indicator called the Ethereum address. It's like Ethereum addresses in profit. So essentially there's a technical indicator that just tracks what percentage of Ethereum wallet addresses are in the profit, how many of them are actually making money. And now we're seeing after this massive rally that a vast majority, over 90% of these wallet addresses are in the profit. And what this means is we're sort of in the sell zone, because every time we have seen this happen for Ethereum, every time we have above 90% of wallet addresses who are in the profit, who are making money, we have seen crypto, we have seen it have a bit of a correction and sell off just a bit. So moving forward, just to pick this up, moving forward, we just need to keep an eye on that, because historically, whenever we have had 90% or more of addresses in the profit, we have seen them start to sell off at any signs of like any bit of a scare in the market. So it's like people who may not be bullish on crypto long term, they see a little bit of a downturn, they might go ahead, sell off their position. People who aren't bullish on it may, or even people who are, may just want to take some profits because maybe they got into Ethereum or Bitcoin back in February 2021 when prices were a lot higher. So that's another thing we need to keep an eye out on. Bottom line is though, I'm pretty bullish on crypto right now. Very bullish, short term and long term, because there's a lot of technical indicators for Bitcoin that look great. They look great in terms of Bitcoin whale addresses, which are accumulating more. In terms of what is going on with technical indicators, we recently broke through a couple of key resistance levels for Bitcoin at $40,000 per coin. That looks good. So there's a lot to like, but we got to remember what is going on with regulations in the U.S. government with regards to the SEC, with what is going on with this new infrastructure bill. All of that could have dramatic impacts on crypto over the next couple of months. And while it's not gonna be terrible long term, short term, any changes, there might be a bit of an overreaction. Normally we see overreactions when negative news comes out. When we saw the news come out from China with regards to Bitcoin mining banned, cryptocurrency trading activities banned, that's much more significant, but we saw a bit of an overreaction. So typically what we see is when some sort of bad news comes out, we have a bit of an overreaction in place. Your tugboat. We see a bit of an overreaction take place. And so we just need to keep an eye out on what exactly is included in this cryptocurrency bill, not in this infrastructure bill with regards to crypto. And then also what is going on with the technical indicators, because we have entered the overbought areas in terms of a couple technical indicators. We've been seeing green day after green day after green day. And while I am bullish on it long term, we may see a bit of a correction soon just because of this uncertainty with what is going on with the infrastructure bill. So just want to do a quick update. Just walking tugboat here. Tugboat. Buddy. Just wanted to give you guys a quick update. Walking my dog at, I'm not at my normal house. We're just traveling in a new house right now. So hope you guys enjoyed today's video. If you did, please be sure to like, subscribe, and also if you want to see exactly what stocks I'm buying and selling, crypto that I'm buying and selling, make sure to follow me on public.com. Just go to public.com/Michael. You'll get up to $50 in a free stock. Hope you enjoyed, and I'll see you guys in the next episode.